Hi everyone, nice to meet you all and welcome back to the session. All have joined, I'm assuming. Can we get a quick hello from everyone? That's okay. Guys, just type something so that I'll know that you are here.
Hello, sir. Good afternoon.
Hi, who am I speaking to?
This is Brian, the one who joined personally last time. Hello.
And yeah, we met on the last class.
Yes, sir. Yes, sir.
Yeah. Thank you, Brian. Yes, fine. That's okay. You can all go back to mute. All right. I think last session I had given you a homework to do. I hope everyone has done the homework. If I remember it, let me just take the question. Yeah, I think this was a question. So, anyone got the answer?
Sir, it's 2,000.
Pardon?
2,000, sir.
4,000.
Two.
Two. Two.
2,000.
You're saying these the answer. Okay. Okay. Anyone else who wants to try? Who wants to agree with Brian, or should I start solving it? Okay. It's better we don't waste time. So the sales is 1,000 units, and there is no beginning inventory, so that is 0. Units produced is 1,200. So under absorption costing, we already know that when production is more than sales, we will have a cost of COGS, goods sold, which is lower, and profit will be more, right? Because why? Because in the ending inventory, some of the product cost will be attached and sits in the balance sheet. That is why the COGS will be lesser because of the fixed manufacturing overhead. That was what we discussed in the previous classes, and I had given this for homework. So while preparing the income statement under absorption costing, what we have is sales. How much is our sales? Is what, $10,000? $10,000. Reducing the COGS amount. COGS under absorption costing, product cost is considered is to be expensed on a pro rata basis. All right. So variable manufacturing cost is a product cost. This is a product cost which is given in a per unit basis. So variable manufacturing cost is $5.5 multiplied by how much? 1,000 or 1,200. I think someone had taken a very good doubt on why what should we do this when product or sales, what should we do this? Product cost is always attached to the uh, units that is produced and sits in the balance sheet. And when it is sold, that amount goes to cost of goods sold in the income statement. That is what we discussed till now in the previous 3 classes, right? And whatever is not sold sits in the balance sheet as closing stock, right? So under absorption costing, what happens is since ending inventory is there, because since here the product is the units produced is 1,200 and the products the sales happened is 1,000, so obviously 200 units worth of product cost is sitting in balance sheet as of now, right? And we are selling only 1,000 units, and variable manufacturing cost, which is an overhead, which is a product cost, which is variable in nature, per unit basis and it does not change. So it's $5.5 for 1,000 units. So that's how much? $5,500 is the variable manufacturing cost that we got. Later comes is fixed manufacturing overhead, which has been incurred for what? 1,000 units or 1,200 units? 1,200 obviously. So fixed manufacturing overhead we are prorating. So we need to find out the per unit of fixed manufacturing overhead so that we can allocate it to 1,000 units. So how do we do that? $1,200 divided by 1,200 units. What we get is per unit basis multiplied by 1,000 units that is sold. This is sold. How much is that? $1,000. Is there anything to consider here as a product cost? Is there any product cost apart from these two given in the problem?
Absorption only we are like segregating.
Not fixed cost, fixed manufacturing overhead. Only see, that is what we had taken an example here. Fixed manufacturing overhead and fixed selling, fixed SG&A. The difference here is this is product cost. Why? Because this is an overhead. Direct material, direct labor, manufacturing overhead is a product cost. SG&A, selling expenses, admin expenses, theft expenses, abnormal losses, fire accidents, losses, anything that is abnormal in nature and anything that we cannot expect to happen is considered as a period cost, and it is expensed in full when it is happening. Do we know when the theft is going to happen? No. Do we know when the no fire accident is going to happen? No. It happens on that period itself. So that is the reason why we are expensing this in full. It is fixed, obviously. If it is variable also, we are expensing this full only. So the difference between fixed manufacturing and fixed SG&A is how we treat it. This is period cost. This is product cost. Product cost, we are attaching it onto the products that is produced, sits in the balance sheet. When it is sold, it comes to the income statement as cost of goods sold based on the units that is sold. I mean, that is what we discussed in the previous two, till now. So how do we allocate fixed manufacturing overhead is what we explained, what we discussed right now. So we are selling only 1,000 units. The fixed manufacturing overhead, which is a product cost, is prorated to the units that is sold and sits in the income statement as cost of goods sold under the absorption costing. We are preparing as of absorption costing as of now. All right, so that's it. And what we get is 3,500 as gross profit. We reduce we are reducing what? I mean, reducing means we are lessing again. We are lessing again what?
Sir, the period costs.
Yeah, the period cost. What are the period cost here? Variable SG&A.
Yeah, variable and fixed selling.
So variable SG&A is based on the units that is sold. So that is 0.5 multiplied by 1,000. And fixed SG&A is a period cost. We are expensing it as full amount. So that is fixed SG&A. The answer when we are subtracting from the $3,500 should be how much? This is 1,500 and this answer is 2,000 should be the answer. 2,000 should be your answer. Am I clear right now? Now comes to variable costing. This is another method. Variable costing, the only difference is we are taking everything as same. Everything as same. We are taking this as a product cost, this as a product cost, this also as a product cost. This we are considering it as a period cost. Fixed manufacturing overhead is considered as a period cost. Why? Because rent in the method of absorption costing in absorption. To understand why we are taking fixed manufacturing overhead as a period cost in variable costing, we need to understand what is happening in the absorption costing. Absorption costing, we are taking fixed manufacturing overhead as a product cost under absorption costing. Why? Because it is a product cost. I mean, there is no much logic behind to why we are doing this. Since product, we all, if you know the pattern, if you know the behavior of this cost, like rent, depreciation, and all that, which is an overhead, which is fixed to throughout the year in a long run. We are considering this as a product cost. We won't be unable to understand the exact amount or the exact profit that we are incurring as per the income statement. I had already said that under the US GAAP, only absorption costing is considered valid for the financial reporting purpose, right? But variable costing is used only for the internal decision making purpose. Why is that? Because under variable costing, when we are reclassifying from above, you are taking it as an under, like from the above cost of goods sold, what is happening, you are taking it down to period cost and expensing it fully. That means you will understand the exact amount of profit that is incurring under variable costing. If we let's take an example here. I'm just taking an example. So if you take down manufacturing overhead, so we are preparing income statement. This is sales happening. Okay, we are reducing variable manufacturing overhead, direct material, direct labor. Obviously, fixed manufacturing overhead will not come. So what we get is an amount which is called as contribution margin, which means that from here again we are reducing the fixed cost. Manufacturing cost. So as soon as the sales happen, whatever variable cost that was attached to the sales can be recovered at then and there itself. The variable cost, direct material, direct labor, and variable manufacturing overhead, like electricity, whatever that is. Once a sale happens, which is attached to the units that is sold, can be recovered then and there itself. At the same time itself, obviously, when we are selling, when we are keeping it as selling price of 100, and we have a variable cost of let's say 90. Obviously, when we are selling it for $100, we are recovering at then and there itself, right? And the profit what we are getting is $10. So are we not recovering $90 from this $100 when we are selling? Are you getting my point? When we are selling a unit for $100 and our variable cost is $90, we are recovering this $90 then and there itself when a sale happens, right? We are not waiting for after 1 year to recognize the cost and then report it. Variable cost is recognized when a sale happens. Obviously, we are not waiting for the year end to recognize the no cost incurred. So under variable cost, we are recognizing the variable cost when as soon as the sale happens. But we are recognizing the fixed manufacturing overhead when it is incurring at that period. When the rent is happening, it is happening on a monthly basis, but we are recognizing it only as a period cost under fully as expense on that period itself, like year end. We are not considering, we are changing the actually from product cost. From product cost, we are converting this into period cost. So the entire decision or the entire no income statement reverses, changes. No, you might be thinking it's like a deck of card. From above you took it downwards. What is the difference? I mean, there is no difference at all. To understand the difference, you need to compare absorption costing and variable costing. In variable costing, we are expensing the variable cost fully as a product cost. What we get is contribution margin. Contribution margin means the amount of profit that you get, this $10, which is contributing towards the further cost, like fixed cost. Actually, variable costing is method is used in CVP analysis. Have you heard about break-even point? Have you heard about this concept of break-even point? So to calculate break-even point, we are using variable costing method. Let me take an example here. Let's take same example. I'll just solve it once, and then you will get an idea what I'm talking. So under what do you call that? Absorption costing, what we got is same. I'm using the same example. What we got is a operating profit of 2000. Here the production was more than sales. Under variable costing, what is happening? Sales is considered as the same. It's $10,000. But the slight difference is of manufacturing overhead. Fixed manufacturing overhead is considered as a period cost. So in full. So we are considering all the variable cost here at the beginning. So that means variable SG&A, variable manufacturing cost will be coming here. I'm not saying that variable SG&A is a product cost. Okay. I'm not saying that variable SG&A is a product cost. No, I'm not saying that. It is still a period cost. But we are considering it to be coming on the cost of goods sold. In the variable costing, we are first deducting all the variable cost. What we get is contribution margin. Contribution margin means the margin from the profit that is contributing to the fixed cost. Means anything that can cover the fixed cost is called as a contribution margin. So in the variable costing, we are considering direct material, direct labor, variable manufacturing overhead as product cost, fixed manufacturing overhead as a period cost. This is the only difference. So then you might be asking, why are we taking variable SG&A as a product cost here? Since all the variable cost is coming here. No, it's not. It is not a product cost. Even under variable costing, we are not taking SG&A as a product cost. It is still a period cost. It is still a period cost. But since we are using this method, variable costing, we are taking all the variable cost in the beginning. We are deducting all the variable cost in the beginning so that we can get the contribution margin. That is the only concept here, only logic here that we are using. So if we are taking variable SG&A, how much is this SG&A? $500. And variable manufacturing overhead is what? This is done. And yeah, 5,500. So that's $4,000. From here, we have to reduce the fixed manufacturing overhead in full, which is a period cost. And then we have fixed SG&A, which is another period cost. That is $1,000. How much is it? $1,800. This is the same amount which is given here. I mean, the answer is already in front of you. I'm just preparing the income statement for you. So what we understood here is if the production is more than sales and ending inventory is sitting in the balance sheet, absorption costing will be more than the variable costing. Why? Have you noticed that? When I'm comparing with absorption costing method and variable costing method, if you notice, in under absorption costing, we are getting an operating profit of $2,000. We are getting a profit of $1,800.
So we are considering fixed overhead.
Yes, we are considering fixed overhead fully in the variable costing. That is one thing. So then what is happening in absorption costing? We are segregating. Why we are segregating? Product cost. Yes. Under absorption costing, we are considering fixed overhead as a product cost. Here it is product cost. The only difference between these two is because of the this item here. If you see, the difference between absorption costing and variable costing is of $200, right? And the difference between production and sales is how much? 200 units. If we divide this, what we get is what?
The fixed cost per unit.
Yes, what we get is fixed overhead per unit. How did you get that?
The 1,200.
Yeah, if you divide this 1,200 by the units produced, we get is $1. That's the same as here. So what I'm trying to say is the difference between absorption costing and variable costing is the difference between the ending inventory, which is cost, ending inventory, which is cost by fixed manufacturing overhead. Can you mute someone? Who's that? Please mute. Are you getting the pattern here? The difference between absorption costing and variable costing is $200. The difference between production cost and the production and the sales is 200 units. That is the ending inventory, obviously. This is sitting in the balance sheet right there, right? So can I say that operating income is more because of the ending inventory? Is it right to say that the difference in the operating income between these two methods is because of the ending inventory? Can I say that? When production is more than sales, obviously absorption costing will be having more operating income. Why? Because we are allocating fixed manufacturing, we are spreading the fixed manufacturing overhead to the units sold, right? Not to the units produced. So obviously cost of goods sold will be lower. That means profit will be more. I mean, when the okay, under absorption costing and variable costing, okay, we have taken the previous example where production is more than sales, where this is 1,200 units and this is 1,000 units. All right, the difference between two is the 200 units, which is the ending inventory. This is more. I mean, under absorption costing, ending inventory is more. Can I say that cost of goods sold is also is reduced? When ending inventory is increasing in the balance sheet, cost of goods sold will be reducing. Why? Simple. Product cost, we are attaching the product cost to the units that is sold. If you are selling lesser units, if we are selling lesser units, then obviously COGS will be lower and profit will be more. Are you getting my point? Are you getting what I'm saying? So that means under absorption costing, when we produce more and sell less, obviously profit will be more. Why? Because COGS is less. Why COGS is less? Because we are attaching the product cost to the units that is sold. So the production manager comes to me and see, okay, wow, that's great. If I sell less units and produce more, then I can show profit in the books of accounts. Then I will do that. Are you getting my point?
Yes.
I just have to show ending inventory in the balance sheet and show lesser units in the income statement. So that is a loophole, which is not accurate, right? Obviously, that's a loophole, because when someone comes to you and say that, okay, wow, if I produce more and sell less, then I can show profit. Then that is not an accurate representation of the income statement, right? But anyway, under GAAP, it is they are suggesting to to show absorption costing as the external financial reporting purpose, because of the treatment of fixed manufacturing overhead. Why? Because in absorption costing, we are taking fixed manufacturing overhead as a what type of cost? Product cost. Yes, of course. That is the only reason why GAAP is allowed for absorption costing and not for variable costing. What are we doing in variable costing when production is more than sales? Here also the production is more than sales. We are taking this as a period cost. That is first thing that we are doing. Yeah. So that is expensed fully. That is one thing. Second thing is we are taking the whole of the variable cost. Obviously, when fixed manufacturing overhead comes down, and we are taking the we are taking the variable cost fully as COGS to get to contribution margin. Because this is the method of variable costing. In variable costing, we are getting contribution margin, not gross profit. Contribution margin simply means that any margin that you have gained that contributes to the fixed cost, or I can say that any margin that can cover fixed cost. So in variable costing, what we are doing is we are expensing the period fixed manufacturing overhead as period cost fully. That is one thing that we are doing. And apart from that, we are expensing variable cost as COGS fully. Fully means the whole of the variable cost, not the amount. I'm not talking about the amount. I'm talking about the variable cost, this line item. Line item. As you saw here, I have taken variable manufacturing overhead and the SG&A fully here. I mean this two amount, and I got contribution margin. That is what I'm talking about. So that is first thing. First thing that I'm doing is here, and second thing, I'm taking all of the variable cost as COGS here, and obviously COGS will be more, contribution margin will be less, fixed cost is more, and profit will be less. If COGS is more, obviously contribution margin goes down. Fixed cost is more. Why? Because we are expensing it fully. The fixed amount after the contribution margin, we are expensing it fully. It is going up. Obviously, the profit comes down. And that is why we are getting a difference of $200 from the previous example, which I showed here. If you go to that page number 74 question, you will get to see. So this difference is nothing but the difference between the production and the sales of $200 units, which gives us $1. If you divide, this is nothing but the fixed manufacturing overhead per unit. So to typically say that the difference between absorption costing and the variable costing is the difference between the operating income. The difference between the operating income is happening because of the ending inventory, which is sitting in the balance sheet. If you divide the difference between the operating income with the ending inventory, what we get is the fixed manufacturing overhead per unit. All right, we'll solve one more question. Don't worry. You'll get an idea when we solve questions. Here the answer was already given. This, did we solve it? Yeah, this they are talking about the contribution margin. Can you solve this using both the methods? Absorption and variable, yeah. I have to reduce it. So I will, okay, just solve it using the absorption method and the variable costing method. You solve it for absorption, I will solve for, I will, no, I will, you solve it for variable costing. Everyone try for variable costing, I will do it for absorption costing because that is already taken. I don't want to spend time. Try to solve for variable costing and get me the operating income. Excuse me. Yes, how much is the operating income for variable costing? 90,000 is the sales. Direct material is a product cost. Direct labor is a product cost. Other manufacturing, okay. This is a variable, direct material is variable cost, direct labor is a variable cost, variable manufacturing cost is a variable cost. That's it. What we get is contribution margin. From here, we are reducing the fixed manufacturing overhead and fixed SG&A. So how much it should be, the answer. So this is 30 multiplied by 900. This is 20 multiplied by 900. This is multiplied by 900. Manufacturing, fixed manufacturing cost, we are expensing it full. So that should be 1000. Variable selling is multiplied by 900. Fixed SG&A is full and fixed admin is also full amount. This is the only difference. So how much is the answer?
Sir, hello, excuse me, sir, just a clarification. Hello?
Yeah, tell me.
Yeah, yes, sir. How about variable selling cost? It will be included also in the in determining the cost contribution margin.
Yes, this is variable costing that we are doing. In variable costing, we are taking the variable selling as a inside the COGS to get to the contribution margin.
Right? Yeah. So yes, sir. DM, DL, VMC, and the variable selling cost should compose the totality to get the contribution margin, right?
Yes. I mean, okay, you're asking me why I didn't add this here. Yeah, this
Yeah, yes,
will
sir.
also.
Yes, sir.
Yeah. You can also come here. Yeah. So under variable costing, this amount will come first. I mean, first means we are deducting from the sales, direct material, direct labor, variable manufacturing cost, and variable SG&A. These three will come as a period cost under variable costing method. So yeah, what is the answer? We don't have time to waste.
Sir, contribution margin is 25 to 100.
25,200. Okay. And operating income?
It's 14,800.
14,000?
800. 14,800.
14,800. Okay. So the operating income in absorption costing method is 15,300 and 14,800 in under variable costing. So what is the difference between these two? $500.
Yeah, five.
And tell me the fixed manufacturing overhead per unit. What is the answer? I want fixed manufacturing overhead per unit. It's already given in the question, but I want to know the logic behind why, how did we get this $5? We are dividing this by the difference between these two. Is it the same? It's the same here also.
500.
You get it?
Yeah,
You
it's
get
5, sir.
Yeah. You got the logic here right now. So, So if the production is more than sales, obviously we are getting a operating income more in absorption costing and less in variable costing. So then what about production if less than sales? What happens then? If production is more than sales, we know that absorption costing will be more than variable costing because of the reasons that I explained. If production is less than sales, obviously there some ending inventory was there in here in year one. Okay, this goes as the opening inventory in year two. This is the beginning inventory in year two. We did some production for the current year. I mean year two. We produced, let's say, 700 units. We sold, what do you call that? 600 units. All right. So here, can I say that production is more than sales? No, this is a bad example. Yeah, because I want to give some a figure that is more than production. So that's around, let's say that is between 750. All right. Here, the production is more than sales. So what will happen to the difference between the operating income of variable costing method and the absorption costing method? Using the logic that I said between balance sheet and the income statement. In year one, the balance sheet had 200 units. 100 units, which was sitting in year one. Later on, it went to the balance sheet of year two, opening inventory, but we are selling 750 units. So obviously, the product cost in the balance sheet will be lower, and COGS will be more. Why? Because the ending inventory is reducing actually. If you see from 100, it's going to 15 units. We are producing 700. We are selling 750. So obviously there are only 50 units in the balance sheet. The total units that is there is 800. That I fully agree with you. We are producing only 700 units, but we are selling 750 out of this 800. So can I say that only 50 units is remaining in the balance sheet? So from 100 units we came to 50 units. So can I say that COGS is become more?
Yes, definitely, sir.
Can I say that COGS is more, become more? Can I say it? Does that make sense? Because obviously the product cost,
Yes.
when we are attaching the product cost to the closing stock, it is when it is reducing, obviously it's going to the cost of goods sold. So then cost of goods sold is increasing in year two. Then that means profit is coming down. I'm talking about absorption costing. Okay, I'm talking about absorption costing. So then absorption costing's profit will be lesser than the variable costing. In variable costing, what we are doing? We are expensing the fixed manufacturing overhead fully for the units sold. I mean, for the units produced. So obviously, the period cost will be more, but COGS will be less. And period cost will be more means I'm talking about the fixed manufacturing overhead. Fixed manufacturing overhead will be more, obviously, because that we are taking it fully. But COGS will be lesser and profit will be more. Let's understand this by an example. Let's understand by an example. Okay, for this I have to go back to the Hawk PDF once again. Guys, 1 second. It's there. Sales is 750, beginning inventory is 70, production is 100. Budgeted is 100. That's really then 50 production is 1000 units. So it is. No, I'm not getting a good example here. Beginning first process assumption. Guys, 1 second. Let me see. One second, I'm sharing a document right now in the group. It's already previously shared, but it's not able to download. Yes. Can you see my screen here? So Here, if you see, they are asking us to calculate FIFO method. Okay, FIFO method means first in, first out. What does that mean? What comes first will be sold first. And LIFO, what comes last means earlier will be going first, right? So in the year one, we already know what is going to happen in year one. We are producing to 12,000. We are selling 7,800, which means production is more than sales. What does that mean? Absorption costing will be more than variable costing because of the fixed manufacturing overhead and the ending inventory sitting in the balance sheet. Here in year two, the whole circus changes. The ending balance in the year one will become the beginning balance in the year two, and it is producing 10,000 in the year two. So the available units with this is 14,200, and we are selling 12,000 of it. So that means in the year two, we have a ending balance of 2,200. Now I want you to calculate absorption costing under in year two. Can you all do that? Just try it. Don't worry, I will do it along with you. Under absorption costing, while we are getting a sales, we are selling 12,000 units for the rate of 2.1 per unit. So that is 12,000 multiplied by 2.1. It is around 25,200, which is already given here. 25,200. Don't forget, we are doing absorption costing. Okay, less. What happens next? Variable manufacturing overhead. How do we calculate that? 0.9 multiplied by what? 0.9 multiplied by what? Selling quantity. What is
That's all.
what is selling quantity? 12,000. How much is that? 10,800. Now comes the difficult part. How do we prorate manufacturing overhead? Fixed manufacturing overhead. That is where the FIFO method comes in. Fixed manufacturing overhead, we have to prorate, obviously. Yes, based on the sales that have happened. How do we prorate this? They are asking to calculate based on the FIFO method. So what comes in first and what goes out first in year two? And at what rate? What comes in first and what goes out first? And at what rate? No, we are selling 12,000 units. So which is sold first and which is on what rate? Which is sold first? And my question is, which is sold first? In this data that is given, which is sold first? $4,200. Now, what rate?
The previous year's rate.
What? What is it? I didn't hear. Can you repeat?
Sir, the previous year's fixed manufacturing rate.
Yes, perfect.
The rate has not changed from year one to year two.
Yes. We have brought in the 4,200 from year one to 4,200 to year two. There is no change. So we are allocating obviously at the rate of 5,000 units, $5,000. This is dollars. Okay. This is dollars. So how do we allocate this now? We have to allocate 4,200 on the rate of $5,000. How do we allocate this?
Sir, we have to determine first what's the rate for
Yes,
the year
yes. What's the rate for year one?
one. It's around 0.42, 5,000 divided by the total produced product.
Yes. How much is the total produced?
It's
12,000.
12,000, so 5,000 over 12,000.
So we got the per unit basis.
Yes, sir, it's around 42.42.
Is the logic correct? Is everyone agreeing with Brian? I think Brian is the one who's speaking, right? Did you get this logic?
Yes.
The previous year's ending balance we have brought forward to the beginning as beginning balance in the year two. So there is no change in the rate that we are going to allocate. First in, first out, we are giving, what is the method? First in, first out. What does that mean? We are allocating the units that has come first on the units that has been come first on the rate of the previous year. That how is that method is. So 5,000 units, this 4,000 units is come from the previous year, which should be allocated based on the previous year. So then the next step is how do we find out how do we allocate? 5,000 units is being produced. 5,000 units is being produced for the 12,000 units. So then we get the per unit basis. Are you getting? We got the per unit basis and then we have to allocate it on the 4,200 that has been sold first, fee for. And now, what is the answer for this? How much is it coming? Huh? 1750. 1750. Now comes to step 2. So out of 12,000 units that has been sold, we have allocated 4,200 units. Okay, we have allocated 4,200 units. What is the remaining units that is to be allocated?
The 7,800.
800. This will be on what rate? New rate, obviously. Yes.
The new, yeah.
Yes, the new rate. What is the new rate?
It's
5,000
0.54, sir.
divided by what? What rate? What is the units?
The producer, the product of this year, so which is 10,000.
Yes.
10,000 euros.
Perfect. Right. You're right. The 5,400 units that has been incurred for the units produced, we are not taking this figure. We are not taking 4,200. Why? Because that is the total available units with us, not the units. This is the units produced. 5,400 units dollars has been incurred for the purpose of the production of 10,000 units. So we have to divide this by 10,000. So we get the per unit basis, which we have to allocate it for 7,000 units, 7,800 units. So then what is the answer for this? 4212? 4212? 4212. The gross profit that we get is how much? We have to deduct 10,800, 1750, 1750 and 4212. How much is the gross profit? Which? 8438. Okay. And less, which is 7,500. How much is that? I think it's 160 something. No. 938. 938. Yeah. Which is a positive amount. This is the operating income. Are you getting my point? Okay. We have come to the absorption costing method. We have We have got the, I'm rubbing this off. Okay. Under absorption costing, we have got $938 as a operating income. What about variable costing? Sales 25,200 less. We are taking all the variable cost. How do we take all that? This will be 10,800. This amount. It will remain same for both the methods, right? Variable manufacturing cost, variable SG&A is how much? 3750. How much is this? $10,650. $10,650. No. What did you get? 10,650. I mean, you're talking about the contribution margin?
Yeah.
What? No, I'm asking for the total of this amount. 13, 14, 550. Okay. How much is this? The difference of these two amounts? 10,650 is the contribution margin. Okay. We are reducing what? Fixed manufacturing overhead as full amount and 3,750 as the fixed SG&A. How much is that? $1,500 is operating income. What did we understand from this? Can you see the method, the operating income changing here? In year 2, we were producing 10,000. We were selling more than what we produced. So here production is more than sales. Sales is more than production. So obviously, when we look at here, absorption costing is reduced miraculously than the variable costing. Twice. Why did that happen? Obviously, because of FIFO method that we use. Obviously, that is one reason. Second reason is of the fixed manufacturing overhead that we have given fully for variable costing. Also, we have reduced the ending inventory, right? 4,200 is gone now. It's not there in the balance sheet. It is sitting here in the income statement. Can you remember the prorating that happened? 4,200 and 7,100. So obviously we have allocated the 4,200, which was sitting in the balance sheet in the previous year. We have taken it and brought it into cost of goods sold in under what method? Absorption costing method, obviously. So that means under absorption costing, cost of goods sold increased and profit decreased. That is why in this method, when production is less than sales, variable costing is showing more and absorption costing is showing less. Because there is not much change happening in variable costing, to be honest. The only change is happening in the absorption costing. Are you getting the whole scenario here? The whole concept is clear right now? So what if then production is equal to sales then? What happens? But we have produced 10,000, we are selling 10,000. What happens then? What will happen between absorption costing and variable costing? If production is equal to sales, what will happen to absorption costing and variable costing? Just have to think about the fixed manufacturing overhead and the ending inventory. Is there any ending inventory here? If production is equal to sales? No. So then obviously COGS will be same for both. It will be same for both. Profit will be same for both. It will be same. I hope you understand the concept here. You have to read the material also. It's not just about solving questions. I can give you questions to solve, but no, it won't help you unless you read on your own. I don't have a question where production is equal to sales. That's the problem. I can make you solve questions here, but no, there are no proper questions. Yeah, without doing this problem, can you tell me under which method of operating income is more? Without solving, can you tell me under which method operating income is more?
So under absorption, income is higher compared to the
How did you know
variable.
that? Because the answer is given already here. Now, by what amount, that we need to find out. If you look at the question here, the difference is of 25,000 units. That is the ending inventory, which is sitting in the balance sheet. All right, and by what amount it is increasing, we can say by solving this amount just by looking at this. So this is the total fixed. So 2.2 million is the amount, and we divide this by the unit that is produced. What we get is the per unit. Can you just solve this? 2.2 million divided by 25,000, we will get the fixed manufacturing overhead per unit.
Sir, 8 per unit.
How much? This amount per unit, yeah. 8.8. $8.8. So here, under absorption, direct material, direct labor, manufacturing overhead will be considered as a product cost, and this will be considered as a period cost. So this we have to multiply and see. So 8.8 will be the difference actually. This we might have to solve it, but no, to get the answer. So 15, 10, and 12.5 is around what? 25 plus 25 plus 12.5 is 37.5 multiplied by 9375. Okay, I think under absorption costing it is 9375. Okay, we have to solve this. It will take a lot of time. So go. I mean, you can take this as a homework if you want to.
Sir.
Yeah.
Sir, just a clarification.
Pardon?
Just a clarification, sir. Clarification. Hello?
Yeah. Tell me.
Yeah. Sir, if I am not mistaken, the only difference is about the producer, no, it's around 275 less 250. So there's like 25,000 in the ending inventory. And then we just multiply it by the rate, fixed manufacturing overhead rate per unit, which is 8.8. So 8.8
Yeah.
times 25,000 is 20,000.
Yeah. Or we can divide this also, like 2.2 million divided by this amount. How much is that?
8 or 8.
$8. $8 multiplied by 25,000. How much is that?
That's 200,000.
How much is that?
200, sir, 200.
200,000. 200,000 is the difference between the operating income of, is the difference between, I think it's there in the option. Yeah, these should be the answer. Yeah. Yeah, we don't have to
Oh,
solve.
yes,
Yeah.
sir. In
Yeah.
letter D.
Yeah, I didn't see the, that's why I had to tell you to solve it. Yeah, that is also that is also a method. So difference between absorption costing and variable costing is what? Difference between the ending inventory, which is sitting in the balance sheet, which is not expensed in the absorption costing. So obviously the operating income in the absorption costing will be more. That is what it is saying here. In the income statement, absorption costing operating income will be greater than the variable costing of 200,000. The difference between these two is the difference between the ending inventory, which is coming because of the treatment of fixed manufacturing overhead. No, I didn't have to solve the whole entire income statement to find out the answer. What I did is a simple technique. I didn't see option D, otherwise that is why I told you to solve it. What I did is I did 2,200,000 divided by the units that is produced. So what we get is the per unit basis of the fixed manufacturing overhead. That we multiplied with the different ending inventory. What we get is the total amount of the ending inventory sitting in the balance sheet, which is not coming in the cost of goods sold of the absorption costing. So that means obviously the profit of absorption costing will be more than the variable costing. Okay, does that make logic? Because obviously here production is more than sales. Yeah. Okay, great. That was a good example. So then I'll show you the similar example with this. Can you solve? Uh, yeah. Yes. Can you solve this question using the same logic which I explained earlier? They are asking for how many units is produced. They want to find out how many units is produced. I'm giving a break for 5 minutes. Kobe. Can you solve the same logic which I explained earlier for this question? They're asking to find what is the units produced. Simple logic actually.
Sir, 1 to 50.
Yes. B is the answer. How did we get B as the answer? What is the difference between these two?
375, sir.
$375,
Yes.
which is the value of what? What is this $375?
375 is the difference between the operating income of both methods.
Okay. And
We divide it by the total manufacturing, the rate of fixed manufacturing overhead of 1.50, and you will get 200.
yeah. What he did is $375 is the difference between the operating income, which is $375. All right. When we divide this by the fixed manufacturing overhead, this amount, how much you will get? 250, right?
250. Yes.
250. Sales is 1,000. Ending inventory is 250. Obviously, here operating income is more. So we know that production is more than sales. So obviously, production will be 1,250 and this will be 1,000 units. Simple logic. I mean, if you are very good in maths or if your basics are correct, you will get the answer. Another method to solve this is using the same method what I said, 375,000 divided by the units produced. Units that is produced, what we get is here we can keep it as an X. What is the what we have is 1.5. Obviously, we should get 1.5 when we are producing units produced. When we cross multiply using the basic maths, 1.5x is $375. If we calculate this x, this will become here 375 divided by 1.75. So 1.5. What we get is x. It's basic maths. So x will go to the left hand side when we are rearranging and keeping the left hand side as constant. You must have studied this, right? I mean, x multi 1.5 this is actually 1.5 multiplied by x. So that's 1.5x. So this is constant and this is the numerical. So if this was addition, we can't write like this. We cannot write like this. This will be 1.5 plus x only. And we can consider x as 1. That is the difference between the when the signs changes. Okay, this is basic maths. Doesn't have to break your head or you don't have to know the rocket science. So that's it. Good. I think everyone is keeping up. So yeah, go home, read this concept about variable costing and absorption costing. I think solving questions will take you to the point where you want to understand. That's it. That is all I can say. And this is from Hawk. So these questions are from Hawk actually. I'll be sharing this PDF. It's already shared with you. These questions. There are more questions actually. Actually, there are total 51 questions. So if you solve all 51, you will get a hang of what the concept is. Okay. So yeah, let's take a break for 10 minutes and be back by 2:30. Okay. Yeah, I'll share the answers also. Don't worry. Don't leave. You don't have to leave. Nobody leaves. Okay. Okay, hi everyone. I hope variable costing and absorption costing was not confusing at all. Even if it is confusing, I would suggest you to read Glem and Hawk as well. So since because I have taken from Hawk, these questions are coming from Hawk. So you read the material of Glem as well, also the material of Stanford. So you can read this to get a fair understanding, and then you go to Hawk. And then if that also is not sufficient, you can come to Glem. It's already shared in the group. Okay. Coming to the next concept, it's so for your homework, what you will do is in the next session, you will calculate absorption costing for year 1 and variable costing for year 1. So this is one homework. Second homework is absorption costing for year 2 using LIFO method and variable costing for year 2 using LIFO method. So this you have to do 1, 2, 3, 4. Okay. And I will discuss this in the next session if possible. Don't copy the answer, okay? Because it's already there in this PDF. So for year 1, don't copy the answer. Do it on your own. Try to do it on your own. But year 2, it's not there under LIFO method. So yeah, this we will discuss. Okay, that's it. I just want to make sure that next topic would be PD, hardcore. If you go to your Stanford books that you have got PDF, you should go to page number 292 for the next topic. And if any one of you have opened this Hawk PDF, you should go to page number 944. Okay. So in your Stanford book, it is page number 292, and in your this Hawk PDF, if you have opened Hawk PDF, it's page number 44. The concept that we're gonna take up is the allocation of overhead. Okay, we completed this in the last sessions. We had discussed about standard costing, normal costing, and actual costing, what it is and why it is. Standard costing for direct material, direct labor, and overhead we are using a standard rate. For normal costing, we are using direct material, direct labor, and overhead, and we are using actual rate for these two, but a standard rate for overhead. That is what is happening in the normal costing method. In the actual costing method, we are using actual rate for all the three. All the three means the product cost. I'm talking about the product cost. Okay. Actual rate for direct material, direct labor, and overhead. That is what is the measuring of cost method. How do we measure it? Measure means how do we identify or how do we measure? I had taken example of a cookie where two eggs and two eggs and yeah, two eggs cost $2 something. I think that was an example that I had taken. If I am not wrong, so that you can figure it out. And the second concept here is of cost accumulation, where you need to learn the theory of process costing and job costing and operation costing. That will come in your MCQ and your essay. So all these three will be because practical questions are not available. That is removed from the syllabus from September 2024 onwards. That is what is right now happening. So practical questions are not there. Only theoretical questions are there for process costing. Operational costing, there is no much questions to solve. And job order costing is purely theoretical. Job order costing is purely theoretical. And some questions you will find in Wiley if you have Wiley PDF. If you have Wiley using Wiley, which is stopped actually. Wiley stopped from CMA. So I don't think Wiley you need to see. Coming to the next topic is the cost allocation method of overhead. So we have two methods. So one is manufacturing cost, which is also called as product cost, which is also called as inventoryable cost. Product cost can be divided into three parts. It's the same thing. Okay. Prime cost, conversion cost, and the manufacturing cost. All three together is called product cost, which is nothing but the manufacturing cost. So prime cost is direct material and direct labor. Conversion cost is direct labor and overhead. Manufacturing cost is all three: direct material, direct labor, and overhead. We had solved some questions also. Okay. So to allocate product cost, we have certain methods, especially to the overhead. Why we are focusing on overhead and not on direct material and direct labor? Direct material and direct labor is actually traceable. It is directly traceable to a cost object. Product, it can be a product, it can be a process, it can be a function, it can be anything. Anything to which you assign cost to is called as cost object. I had in the first class taken an example of production of a cycle. You remember I had drawn a chart here where direct cost, indirect cost, fixed cost, and variable cost was mentioned. Remember? So what comes here for a production of a cycle? What is the variable cost that is indirect in nature? Variable cost per unit is constant. Electricity, which is in overhead, which is an overhead. Fixed cost, fixed indirect, rent. Steel, is it direct or indirect for the production of cycle? Steel, direct, because that is a raw material that we are using. Because obviously that is a direct material that we need. Without that, we cannot produce cycle, and is it variable cost or fixed cost? What is the behavior of the cost of steel? Is it variable or is it fixed? How are per ton, like per ton basis, right? Like we are not buying it on a fixed amount. Obviously, we are buying it on a measurement. There will be measurement, right? 1 ton, 100 tons, 2 tons. The the amount will be big, but it is on a per unit basis. Obviously, the per ton steel doesn't cost $10 or $5. Obviously, we know that the amount is higher. The figure is bigger, but it is variable in nature, variable cost in nature. Per unit does not change. I had taken numerous amount of examples from the first class itself, right? So can we say that one cycle, suppose you are paying a rent of $5,000. Okay, this is the rent that you're paying to the factory rent that you're getting, that you're paying $5,000. Can I say one cycle cost $5,000 of rent? Can I say that? Does it make sense when I say it? Why? Because there is some mismatch, right? There is there is no connection at all. When I say one cycle, to produce one cycle, it's costing around $5,000 of rent, and I have to allocate it. So how do we allocate it? I'm talking about the overhead. Rent is an overhead, obviously. It is fixed or variable. It is fixed cost. Rent is a fixed cost. We are paying it on a monthly basis, which does not changes, right? So if I say I'm producing cycles and one cycle cost me $5,000 of rent. So how do we set the selling price then? How are you going to set the selling price if you are allocating $5,000? How do you know? How do you keep a selling price? Can I say $6,000 is your cost of cycle, so that you are adding profit? If you add $1,000 as profit and you say that this is my selling price, can you say that? Is it the right way? Does it make sense? Am I making logic here? You tell me. No, right? You have to allocate the overhead in a logical way, a rational way, so that you can control the total manufacturing cost. That is the basic necessity of every production line that we have in the whole world, right? The necessary cost of production. In the first class, I had discussed about cost price plus selling price is equal to minus is profit. Unless we know exactly what is the cost price, how can we set the selling price? We are incurring a multiple number of overheads in a production line. Trust me, it's not about rent or it's not about depreciation. There are multiple overheads that is happening in a production line, especially. So how do we allocate this into our cost object? And this, in my example, the cost object is what? What is my cost object in my example? Cycle. Cycle is my cost object. Obviously. So then, can I say that no, I'm paying rent of $5,000, so I have to allocate? How do I allocate this $5,000 on a most rational way? For that we have two methods. One is traditional method. And the second one is the most popular, activity-based costing. Activity-based costing, which is a little bit tricky, but with practice you can solve it. First one is called as the traditional method, which is also called as absorption method. This absorption method is not the same what we learned previously. Okay, I'm not talking about that. But absorption method in the overhead allocation is different from the income statement method. That is different. Okay, let's not get confused here. I will just take it as traditional method only. Okay, let's forget this word. So we have two methods here in allocating overhead on a logical, rational basis. Because previously, what happened? I'm talking about decades ago. Decades ago, the overhead cost was very less actually, because the percentage of ratio was around like this, material and labor was costing around 80%, and the overhead was around 20%. That was the ratio previously, because our ancestors, they were working in oil rigs, they were working in fire and safety factories and all that. So the production overhead was very much lower comparatively in the current right now, because right now we are able to manage, control the material and the labor, because labor is cheap, we can control it. Material is cheap, we can control it because we are getting as per the market rate. So both of them are variable in nature, which is fixed by the way. But overhead is out of our control. Anything over and above these two are called as overhead. Electricity, I cannot control. Water bill, we cannot control. Rent, we cannot control. Depreciation, we cannot control. Supervisor salary, we cannot control. CEO salary, we cannot control. Anything that is going beyond our direct material and direct labor is uncontrollable. I'm assuming like that. Obviously, then the ratio changes, right? The ratio changes. This becomes 20%, this becomes 80%. So then we need a logical explanation on how to allocate these overheads to our product. So first method is talking about traditional method. In traditional method, we'll go one by one. Okay. If you go to the Stanford book, it is clearly mentioned as something like this. It's mentioned here under traditional method. Okay, under traditional method, it is mentioned as you are assigning overhead based on a single cost driver. Single cost driver. Single cost driver to the cost pool of activities. You have to understand this very carefully. You are allocating overhead based on a single cost driver. I will explain to you each word. To the cost pool of activity. Now, what is cost driver? What is cost pool? And what is and how is this method applicable? Cost driver is nothing but anything that causes cost to happen. For example, rent is based on what? The amount of rent is based on two options. I'll give you. You tell me the answer. Space and demand. Space, I mean, space means the area. I'm talking about the area. Okay. Rent is cost by what? Of any, what is the causal reason for rent? Is it demand or is it area?
The area.
Huh? Someone said something. Did you hear?
Hello,
Did anyone?
sir. Hello.
Yeah.
Yeah, it's based on the space or the area, right?
Yes. Yes. So the causal effect, causal means the reason. I'm talking about the reason. The reason for the rent to incur is because of the area. Okay, very good. What is the reason for no? How do we, when someone comes and paints our building, painting happens by area or by labor? I'm talking about the painting charges. Painting
It's
charges.
the labor. Labor.
It's both actually. It's both.
Okay.
It's both. So
Yeah.
it's both. So the reason for the cost of painting, I'm not talking about increase or decrease. Okay, I'm not saying that painting cost is increasing because of area. I'm saying that the causal effect, the reason for the painting cost to come, is measured, is driven, is the reason because of these two. So cost driver is nothing but anything, anything, anything that drive cost to be incurred. Am I right? Cost driver is anything that drives cost to be incurred. What is the meaning of that? There will be some activity, there will be something going on in the background that is the reason for the cost to be incurred. We have canteen expenses in our offices. Why is that? What is the reason for canteen expenses in our offices? Why is it incurring? Canteen, pantry. Canteen expenses. What could be the cost driver for canteen expenses? Employee, client, obviously. Employee, clients, client. We can call it client, client relation time, or employee. What do you call it? Employee? What is it? What is it? What do you call that for the word where they take a break? Employees take a break. No. Stress relief time. What is it? What there will be, right? Yeah, stress relief time, what lunch break time, whatever that is. So the cost driver for the canteen expenses to incur in our company, we can say that it's because of the client relation or employee expenses added. So bifurcate, if we bifurcate for the cost with the cost driver, we will surely understand why the cost is incurring. Am I right? In traditional method, the point where I was getting to is in traditional method, this is not considered. This cost driver is not considered. And as I have written earlier, a single cost driver is considered for the multiple overheads. Single cost driver, it could be direct labor hours, it could be direct labor hours or machine hours. Any one of those that will be given in the question. I'm talking right now about the point of view of questions, MCQs, exam point of view I'm talking about. Okay. In the real world, traditional method is not used. Activity-based costing is used. Traditional method has become obsolete, but from the exam point of view, I'm explaining. Under traditional method, a single cost driver is identified. It could be direct labor hours or manufacturing hours, which will be given in the question. So you read the questions carefully. So obviously in the question it will be directly said what if it is direct traditional method or ABC costing. But under traditional method, a single cost driver will be identified. It could be direct labor or manufacturing hours. This based on this, there will be multiple overheads 1, 2, 3, 4, 5. Based on this cost driver, the whole amount, the total amount will be allocated to individual products, or we can say cost object. Now there might be cases where A is using lesser labor hours, okay, and B is using higher direct labor hours. So is it the right way to allocate? Because obviously B will be getting over the higher portion of the overhead, Higher portion of their overhead will be received by B and lesser by A. Because I'm assuming, I'm just giving an example where A is using lesser labor hours and B is using higher labor hours. So obviously the higher portion of overhead will go to B and lower portion of overhead will go to A. That is one method, traditional method, based on the labor hours that is being used. So here there is a single cost driver. We are identifying a single cost driver and we are allocating multiple overheads. The total multiple overheads to different products, A or B. If A is using lesser overhead labor hours, they will be getting lesser overhead amount will be allocated. B, if it is using higher labor hours, B will be getting higher overheads. Is that the right way? Because obviously, if B is getting higher labor hours, then there might be chances, there might be cases where the product is simple in B. Okay, let's take it into the sheet here. So A and B. This is simple product. Let's take this is a Batman figure, Batman action figure. Okay, this is a car manufacturing product. This is a car. Both is produced by a same company XYZ. All right. This is much more complex and requires high inputs. High inputs means components, tires. You know what is the complexity of manufacturing a car? High complex, and the inputs required is higher. Here, obviously, Batman figure does not require much of a complexity. It is simple to produce. It is requiring lower. We can say lower volume. We can say lower volume also, or maybe inputs, whatever. Okay, they both are using labor hours equally, 100 hours, 100 hours. Okay, we are having an overhead of 50,000. Okay, traditional method, we have identified direct labor hours as the cost driver. What is causing this overhead to incur is because of the direct labor hours under traditional method. Okay, we are allocating obviously based on the labor hours, 100 hours each. That means equal amount will go here. Is it justifiable? Is this allocation justifiable? You tell me.
Sir, no, it's not justifiable
Why?
because the other company uses um based on your explanation earlier, sir, it would be unfair for the other company or the other division to be allocated such um, this
Yes.
overhead.
Yeah, I
Yeah.
got it. I got it. Even though they are using same amount of labor hours, they are using the car manufacturing is a highly complex department. It requires a highly efficient people to work. Obviously, the overhead to be incurred here should have been higher. Should have been higher, but under the traditional method, what we're doing is based on the labor hours as a cost driver. We have identified both equally. So can I say that B is undercosted?
Yes. Yes, sir.
Can I say B is undercosted? If I'm going ahead with this method and if I keep a selling price, let's say the total cost was around 30,000. Okay. And I'm selling the car for 35,000. $5,000 is the profit that I'm getting from each car. Is it actual profit? If
Sir, profit is overstated.
Yeah, profit is overstated because the cost is understated. You get my point? So the negativity, I mean, the negative point of traditional costing is removed because of ABC costing. ABC costing identifies each activity. They will classify overheads based on activity. This activity is assigned to a cost pool. Now we come to what is cost pool. This cost pool is again segregated into different drivers. This drivers is then segregated to cost per unit. Overhead amount is understood by the activity in the sense which activity are we doing right now. So if you're producing a Batman figure, there might be different multiple activities, like from the production to the delivery of goods. Let's consider quality control, batch control. Batch, like you must have seen boxes. One box might be containing 100 action figures, 200 action figures, right? So that's one batch. Then there will be quality control testing. Then there will be setup cost. Setup cost means machinery setup cost, repairs and maintenance. So these are all each activity and each overhead. Each overhead will be having single individual amounts. These individual amounts will be classified to cost pool. Now, what is cost pool? Cost pool means 1, 2, 3, 4. These are all overheads, multiple overhead amounts. This is identified into a single cost pool, means the nature of the expenses is identified as uniform in a uniformity. We can say that, let's give an example. When we're preparing income statement, we will get expenses like travel expenses. But there are two natures. One is national, one is international. So travel is a cost pool. Or maybe you can say, I'm explaining to you how are we able to use ABC costing in the real life scenario. Okay. Or maybe maybe we get expenses like subscriptions, IT software, web design, or else contract maintenance. These are all overheads. These are all individual overheads, which we club it and put it as IT expenses. So this becomes another cost pool. Are you getting my point? Cost pool is individual costs are identified by their nature, and they are clubbed it into one cost, which is called as cost pool. This cost pool is assigned to a cost driver. So what is driving the cost pool? That is what we need to understand. Don't worry, we will understand this by an example. How do we allocate overhead based on individual steps under ABC costing will be explained through an example. Traditional costing is clear. Okay, let's take an example. Let's not waste time. Maybe you will understand better if you're doing an example. Yeah. So if you read it carefully, Zeta is a company, is preparing its annual profit plan. That is nothing but the balance sheet. As part of its analysis of the profitability of the individual products, these are the individual products. Okay, controller estimates. Controller means financial controller. Estimates that the amount of overhead that should be allocated to the individual product line from the information given. So, financial controller wants to allocate overheads to these individual products. He has two methods: traditional and ABC. Okay, don't see the question as of now. Forget about the question. Okay. Okay. The budgeted material handling cost. This is the single overhead that has been incurred. Okay. Under traditional costing, we are allocating based on a single cost driver. I am assuming, and it's not given in the question, but I am assuming. No, it's not. It's given here. Okay. It's given in the question that under a costing system that allocates overhead on the basis of direct labor hours. So this is definitely a traditional costing method. We don't have to even think twice which method are they are asking for, right? So the question is asking for traditional method, straightforward question. And Zeta materials handling cost allocated to 1 unit of wall mirror. So the question is asking to allocate cost per unit of wall mirror. Okay, so there is only one individual overhead cost, and that overhead cost is based on the direct labor hours per unit, right? So how do we do it? First, we take the total budgeted overhead amount divided by total of activity level cost driver. Total budget amount divided by total activity level cost driver. What is the cost driver in wall mirror? What is the cost driver of wall mirror as per the question? Direct labor. This is direct labor hours per unit. Per unit. 1 unit is costing direct labor hours of 200 hours. So that means a total of 400 hours. So can I say, or can I write it like this? Because 50,000 has been incurred for both of them. No?
Yeah.
$50,000 is not incurred just for wall mirrors. It's for both of them. Have you, is there any sentence or statement in the question saying otherwise? No. This 50,000 is the total amount. It's written under specialty windows, but it's actually total amount. This is the total. See how they have given it to confuse you. They have given it under specialty windows. So you will assume that wall mirrors is not there. And then why the question is asking for wall mirrors? That you might be thinking. But this is the total budgeted amount which is incurred for both. So what we need is a per unit amount. How is this? I just saw 500 divided by 4. I think it's 125. So $125 is the per unit cost of both the products. Now we want it for wall mirrors. How do we do that? This is pure mathematics, okay? There is no concept here. Just pure mathematical concept is what I am expecting from you.
Sir, excuse me, sir.
Just 1 second. Just 1 second. Okay, guys, I got it. Actually, this shouldn't be 400. This actually, if we take it, if you take it as 400, what we get is what is this amount? Is it dollars or is it hours? If you are taking direct labor hours here, what we get is dollars or amount or amount. For 1 hour, it will be $125. So then what should be the amount? We don't want 1 hour 1 hour rate. We are looking for per unit. Are you getting? So it shouldn't be 400 because if we put it as 400 here, we are getting for 1 hour.
Yes.
So then what should be the amount here?
Sir,
Yeah, tell
I
me.
have a clarification. Yeah. This total budgeted material handle cost of 50,000, can we just like divide this to the total number of produced unit, which is 50, so that we can get
Yeah,
the per unit?
that is where I'm getting it. That is where I'm getting it. I just want to, yeah, that is where I'm getting it. If I'm keeping it as 400, we will be getting 1 hour. 1 hour is around $1,125. What I want is for cost per unit. So we need to put it as 50 here. So that is $1,000, right?
Yes.
Yes,
So
sir.
this dollars is the amount of both of them. So then how much is for wall mirrors then?
Sir, what is being asked is the handling cost per unit. So it's $1,000.
Annual cost? Yeah, no, yeah, that is right. That is right. But here they are asking cost allocated to 1 unit of wall mirrors. This amount is the total of wall mirrors and specialty windows. Are you tracking what I'm saying? Are you able to understand what I'm trying to do here? Under traditional method, we have identified the overhead and we have identified a single cost driver of direct labor. So by default, we cannot keep this 400 as the amount here because what we will get 1 hour. What we need is for per unit basis. So then we have to find out what is the per unit cost of overhead. For that, we removed 400 and we kept as the 50. I mean, the total 225 plus 25, that is 50. So that we got as $1,000. Now I want for wall mirrors only. What do we do that? We have to divide this by 25. I know. This is for 50, right?
Yeah,
This
so
is
per
for
unit
50.
is already 1,000.
Okay, yeah. So 50 is $1,000 and for 25 it will be 25 into $1,000 divided by 50. So that is $500.
The budgeted material handling is for both, right?
Yes. So what I did is to summarize. Hmm?
And then budgeted material handling cost.
Hmm.
For both, it's 50,000.
Yeah, budgeted material handling cost for both of them is $50,000. That is the overhead that we incurred. Okay. What I did was divided by 400. If we do that, what we get is $125 for 1 hour,
Yeah.
which is not required. What we require is cost per unit. Means this 50,000 should be for per unit, right? So what should we do then for per unit basis? We have to remove this 400. We have to keep 50. Why 50? Because this amount is incurred for both of them. So then we have to consider both of the amount units. So that is 50. That we will get what? $1,000 for both of the product. I want it for wall mirrors only, right? So out of 50, 25 is for wall mirrors.
Yes.
We have to allocate this for the $1,000.
So there will be no change in budgeted handling. Like it's 50,000 for all mirrors in your
Yes. If we do that, we get the answer as $500. Can we do this method also? Like for 1 hour, we are incurring $125. So then we are incurring 200 hours for 25 units. $25 is for 1 hour, but yeah, but for 1 hour we are getting $125, and then for 1 unit, no, it's not there. So no, we can't solve it using the direct labor 125. So yeah.
125 per hour, right?
Yeah, per hour, but per hour it is 125, and per unit we are getting 200. So 1 unit is 200 hours. So for what, 1 hour? No, for 1 hour.
For 125 is for 1 unit, right?
No, 1 hour. No, we can't.
It's 120.
Yeah, 1 hour is $125. So we can't use it with that method, I think. So that will be 3125 then. 3125. 3125 into 2. That's 6250. No, that's not possible. We cannot solve with 125. That's okay. Let's not waste time. Okay, so traditional method is what we learned. Okay, let's do another sum. Yeah, they are asking to calculate it based on an activity-based costing. Okay. If it is activity-based costing,
Sir,
yeah,
sir, I think the answer for that is 1,000. I don't know if I'm correct, but the question was like that the unit per of the wall mirror. So regardless of the total units produced, right? So if we divide 50,000 by the total produced products, then it would be 1,000 per unit. So regardless if the question is specialty windows or wall mirrors, it's still the same. It's 1,000 per unit. I don't know if I'm right also, sir, but
If this line was not there, then this is the answer. But
it's the same, sir, no, regardless of wall mirrors or specialty window is being asked. Because for specialty windows, it's still 1,000 per unit. And then for wall mirrors, it's also 1,000 per unit.
no, but the units produced is
He's asking like 50,000 is to both.
okay. You are saying that 1,000 units is for both parts. So you are saying that A should be the answer. But we are prorating it based on the units produced.
Yes, sir. And then under traditional, no, when you explained earlier, like that amount 30,000, how much was that? Like it's being allocated the same with same amount for both division, the car earlier you mentioned. So if we compute for per unit, so it's still the same.
No, like 50,000 is the whole.
Hmm.
So if you take only wall mirror, is it 50 or 20? Units budget for the mirror.
No, but if you're paying wall mirrors, then if you're looking at only the wall mirror, it's the same amount here. It's the same amount coming here. What we want is cost per unit of wall mirror. Wall mirror has 25 units out of 50. We have incurred 1,000 units for both. Both same. This includes wall mirror and specialty windows. So out of this 1,000, wow, how much is for wall mirror? $1,000 is the common overhead cost incurred. Okay, out of this $1,000, what is for wall mirrors and for specialty windows? This should be on a per unit basis. That is the question. So we have to divide $1,000 for 25 units out of the 50 units that is produced. That we will get as $500 each, which gives us the amount of $1,000. Right? This makes more sense. So you will get confused with $1,000 and 500 here. But the question is clearly mentioned about wall mirrors only.
Sir, sorry, sir, I'm just like doing clarification. So, sir, for example, if we do 500 per unit for the wall mirrors, so it's 500. If we multiply it by the units produced of 25, we will get only 12,500, which is not the total cost allocation for the product or the wall mirror. It is 25,000. So, if we multiply 500 by 25, it's only 12,500. So it will not become equally allocated to both divisions, sir.
Okay, let me check with that. Maybe, but why? Why is there a problem with the question then?
See, budget and material handling cost 50,000.
Mhm.
I'm also just confused, sir. No, that's why I'm asking.
Just one
Yes,
second.
sir. Yes.
There is one guy asking question here. Just one second. Yeah.
50,000.
Mhm.
So as per that, for this calculation, when we take whole is 50,000.
Mhm.
When we take only wall mirror,
Mhm.
is it the 50% of that or
Yes,
50?
50% of
Then
the
it should be 25.
50,000 divided by 50. That's $1,000 multiplied by 25. 25,000 divided by 50. 25,000. Yeah, you're saying that this 50 shouldn't be coming here. Yeah, you're right, right.
The 25.
Yeah, that's a slight calculation error from my side, because $1,000 is for what per unit. So then we just have to multiply it by 25.
Yes, sir. Exactly, sir.
Yeah, that's right. You don't have to prorate it again by 50. Yeah, this is fine.
Yeah, this per unit is being asked, sir.
Yes,
Thank you,
yes,
sir.
yes. Because I didn't get that, because I'm solving this question right now. Yes, you're right. So once we get the per unit basis of $1,000, we are multiplying this with 25 units that is produced. What we get is 25,000. So yes, then what? A is the answer. Yes, yes, you're right. Good, very good. Good observation. Okay, well, some people are understanding better than I in maths. Okay, so concept clear right now? Yeah, okay, good. Let's do another problem then. Okay, let's do ABC costing. In ABC costing, we are handling material handling cost to 1 unit of a mall mirror. Material handling cost is $50,000, and that's 5 by 20. Oh, I'll solve it. Okay, in ABC costing, we have identified material handling cost allocated to 1 unit of wall mirrors under ABC costing. 50,000 is the total overhead cost. All right. As I said, we are allocating the overhead, and then we are identifying activity, and then we are identifying the cost driver. Then we are allocating the cost driver to the cost of per unit basis. That is what the method is. So material handling is the activity incurred because of the cost driver. This is the cost driver. Because direct labor is for traditional method. Because material handling cost is direct labor cannot be the cost driver for material handling. Or wait, let's take another example. 1 second. So old questions. Can you solve this using traditional method? This question. No, it's going beyond the page. See? All right. Can you see now? In the online thing, can you see the page that I'm showing you right now? Yes. Okay. Fine. Great. Okay. I want you to solve this question under traditional method. Okay. And the overhead is allocated based on the machine house. Allocation of overhead is happening under the basis, the cost driver for no under traditional method is machine house. Now tell me what is the cost per unit of the overhead allocated. Same formula, same method. We have the total manufacturing cost of 1.8 million, and we have units produced of 20,000 units. We have an overhead of 1.8 million divided by machine hours. So that's 1,08,000 divided by 30,000. That is $60. $60. This is what? This is the answer. I'm not getting a good question.
That is $60 for per hour.
Per hour. $60 per hour. No. No, that is something. Okay, guys, one second. Let me take a good questions first. Yeah, solve this. Yeah, it's the same question. Yeah, it's the same question. One second. Lost my way. One second, let me take a good question. Okay, I'll just take up this question. It's little over the top, but even though, because since I've told you, 18 million is the total amount. Okay, we are taking manufacturing overhead as the no, machine hours as the cost driver. So we are dividing this by 30,000. What we get is the per hour per hour rate, which is around what, $60. This is for per hour. That means per hour. The overhead that we are incurring is $60. For this product, we are requiring 80 machine hours per batch. One batch, 80 machine hours, one batch. Right? So what is the total of the 80 hours that we have? 1 hour, it's $60. So for 80 hours, it's how much? 1 hour, it's how much? 1 hour, it's $60. For 80 hours, it's how much? 18 million, we dividing by 30,000. What we get is a per hour rate of $60. 1 hour, we are costing our overhead of $60. We are using 80 machine hours per batch. Are you able to see? I cannot enlarge the. Okay, we are using 80 machine hours per batch. So that means for 80 hours, it's how much? Got $4,800 as the answer. This is for one batch. 80 hours per batch. One batch contains 5,000 units. What is happening today? One batch is containing 5,000 units. Able to see?
Yeah.
One batch has 80 hours. We got for 1 hour. We multiplied by that by 60. We got 4,800 as the answer. As the answer. We need for 1 unit 5,000 units. It is costing $4,800. So for 1 unit, it's how much? Cross multiply and get the answer. $4,800 for 5,000 units. How much is for 1? What is the answer?
For 5,000 units, it's 4,800.
Yeah. See, if you let me just enlarge it first. I'm not. I think nobody is able to see the question. Can you see it? We got 1 hour. It is costing us $60. All right. We are using 80 machine hours. For how much? For 80, it should it is how much? It is 80 hours per batch, one batch. 4,800 is for one batch. One batch is the size of 5,000 units. So one batch is 5,000 units. So that means $4,800 is for 5,000 units. So for one unit is how much? We have to divide that by 5,000 units and get the answer for one unit. 0.96.
Cost per unit.
This is the overhead allocated for per unit. This is the answer. So what we did is the total amount divided by the cost driver. We got 1 hour as $60. The machine is using 80 hours for one batch. So we multiplied it by 80 hours. We got for 5,000 units. 5,000 units is nothing but one batch. That is $4,800. So for one unit, it's how much? We cross multiplied, we got the answer as 0.96 as the overhead allocated as per traditional method. Now coming to ABC costing, that's the tricky part. Under ABC costing, we have to allocate this based on every individual activity. So 1, 2, 3, 4. Here, $720,000 divided by 600,000, 6 million. This divided by this divided by this divided by this. If we do it, we get per batches, per machine hours, per setup, per parts handled. All right, you do that. That is the first step. We identified the overhead. We allocated per unit based on the activity. We identified the cost driver, which is already given. Material handling, number of parts handled is the cost driver. What is the answer? Can you just calculate this and let me know what is the answer per unit basis? And why are we doing this? You know, do you know why are we doing this? Because we want to know the per number of parts handled, like individually per parts handled.
Sir,
Yeah, give me.
sir, that point 96, it only that was the overhead applied, sir, right? So
Which one?
that point 96, sir, you calculate. That's the
0.96 is only the overhead. Yes.
yeah overhead. So we have to add also direct material,
Yeah,
cost per unit,
we,
and the direct
yeah,
labor.
we if we add this amount, What is the answer? What is the total? 6 plus 5, 11. 9 plus 1, 10, and 11.6.11.
Yes, sir.
C is the answer. Okay, that is under traditional method. Which one was this one, right? This one, yeah. So I'm doing right now for ABC costing. How do we solve for ABC? ABC costing, we have identified individual cost overheads. We have to allocate this based on the activity, identify the cost driver, and then to the cost per unit basis. That is what we have to do. I will show you like the difference between traditional costing and ABC. What is this? What is the amount of? We have to divide this by this, and this what?
0.1.
0.12. This is 420.
Yes.
This one
80.
18.
Four.
450. So we have identified the individual like per cost driver. Like what is the cost of overhead on a individual cost driver basis. Material handling is the overhead amount. That is the activity that we are doing. The amount of the activity is given here. The reason for this cost to be incurred is the cost driver, which is already given here. Now, if we look at the data and if we go down, the material handling is caused by the number of parts handled, which is given down below. Number of parts handled, number of parts finished. This one. So if you multiply this by 5, we get the total amount. How much is this? 12, 0.12. Hmm?
0.6.
And 420 is now the next one we have is setup cost. The cost driver is number of setups. We go down, look at the cost driver here. What is that? Is 2 per batch. 2 setups per batch. So multiplied by 2, 840. No, that is one batch, right? We are looking for per unit basis. So instead of multiplying, what we need to do? Divide by 5,000 to get 1 unit. Are you getting? Because setup is for 2 per batch. 2 batch. Like 1 batch is costing 1,000 units. So we need to divide this by 5,000. To get, we are looking for cost per unit. Right? On a individual overheads that we are incurring. We have incurred individual overheads. Activity-based costing means that we are allocating overheads individually to the cost drivers incurred. That is what is the concept of activity-based costing. The question is asking for cost per unit basis. We identified per unit cost or the per cost driver, the amount of individual cost drivers, like one cost driver. When we are dividing this by this, we are understanding that one setup cost is around 420 for one batch.
Yes.
One batch is consisting of 5,000 units. So for 1 unit, how much? How do we know that? Divide 420 divided by 5,000 units, we get for 1 unit. This is for 1 unit. 18, we have got it for this. This is the 18 that we got. 30,000 machine hours. Machine cost, machine hours is mentioned here. 80 machine hours per batch. Eighteen when we are dividing 540,000 divided by 30,000, what we are getting is on a per hour basis. 1 hour is costing around $18. All right, this is what we are getting. We need to allocate this based on the machine hours. That is the cost driver. It's clearly mentioned here. The cost driver for machining cost is machine hours. Machine hours. A batch size, a single batch. A single batch is using 80 machine hours. 1 hour is costing $18. 80 hours is costing how much? 1440. This is for one batch divided by 5,000. We get for individual unit. That is 18 multiplied by 80 divided by 5,000. That is 0.288. That is one. That is done. Are you getting the logic here? Machining cost is the overhead. This is the amount. This is the activity of the machine hours, the activity hours of the machine hours. The cost driver for this activity is machine hours. We are incurring 80 machine hours for one batch. One batch has 5,000 units. When we divided this, we got $18 as for 1 hour. We want for per unit. We multiplied this by 80. What we get is $1440 for one batch. One batch is having 5,000 units. We want for 1 unit. That is 0.288. This is pure mathematics. There is no concept here that I am applying. I'm not applying any concept here at all. I'm just explaining you the basic mathematics here. All right. So that is $18 multiplied by 80 divided by $5,000. So that is done. So this is done. This is done, and this is done. Quality control is the number of batches. So there are 500 activities going on in the production of this Ferragets products. We divide this. What we get is the amount for one activity. This is for one activity. Like that, how many activities are there? Like number of batches are there? Number of batches is there are what? So 5,000 units, right? So yeah, one batch 5,000 units. So there are 500 units. So one batch is costing $450. I want for 1 unit. So that is $450 divided by 5,000. That is 0.09. What is the total of 1, 2, 3, and 4? Is this answer? This is the overhead as per ABC costing. Did you get the logic? I know it's very confusing. I know it's very hard to understand. Why am I doing what am I doing? What I did is very simple, to be honest. Everything is given in the problem. Activity is given. The cost of the activity is given. The activity that is going on, what is it doing? Material handling is going on. There are 6 million material handling figure that is happening. Maybe you can call it hours, whatever. There are 750 setups, machinery setups that is going on. 750 machinery setups. So one setup is costing how much? And the number and how many number of setups are there in this production, that we need to find out. First, I divided this amount to get one what the amount for one part handled, one setup, one machine hours, one batch. I converted that into individual items. And then I converted into units, cost per unit. Now, if I am dividing this, the logic behind dividing is this. I will, and I have want to understand the dollar, the cost that is incurring on a per part that is handled. I understood the cost driver is number of parts handled. I go back to the question. I see how much is the number of parts handled, which is 5 parts. Since I got how much was it? The amount 720. Zero 0.12, right? 0.12 is the per part that I handled. There are 5 parts for 1 unit. That is how much? Multiplied by 5, I get $0.6 per unit. I have brought it down to per unit. Per unit. There are the overhead amount for per part handled is 0.12. There are 5 parts for 1 unit. That way I get 0.6 as per unit basis. I did the same for all other overhead costs. I didn't do anything else. Same thing. Setup cost, I divided 370. This is dollars amount. How much I got? It's around $420. This is per setup. Like that, we have how many setups? We have 2 setups each. One batch is having 2 setup. We have already got for one setup. Are you getting me? For one setup, we have already got the answer as $420. And one batch is considering of 5,000 units. That is already given here. The batch size is 5,000 units. So I want for per unit basis. So that is 420 divided by $5,000, 5,000 units. What we get is the answer for per unit basis. How much is that? All right. Coming to quality control, no, machine hours. This is the amount that is incurring for machine hours. We divide it by 30,000 to get for 1 hour. We are having 80 machine hours for one batch. This is $18. If you multiply this, we get for one batch. One batch is of 5,000 units. How much is that? $60, right? 18 into 80. What was the amount? 18 into 80. Yeah. $1,440 for one batch. One batch is having 5,000 units. So I want for one unit. So we divided this by 5,000. This gives me 0.288 as the answer for one unit. So that is done. Quality control, number of batches. But there are 500 batches. For one batch, it's how much? One batch. One batch is consisting of 5,000 units. We already know that. 2,25,000 divided by 500, I get for one batch. That is $450. $450 for one batch. So for one unit, it's how much? 0.09. We added. What is the answer we are getting? We are adding all those machinery overhead. No, overhead. Manufacturing overhead, not machinery overhead. How much we get is the overhead only for the ABC costing. Under ABC costing, overhead is around, I think it was $1, 1.90. I think it was 1.09 something. To this, we add the direct material and direct labor, we get the total manufacturing cost. I think it was 1.09 plus 5.1. So it's hardly around 6.24. This should be the answer. I forgot how much I got for the last class. Did anyone calculate? I think it was 1.09. Anyone remembers? 1.062. Right. 1.062. Yeah. 1.062. Then the answer should be C. 5.15. 1.062. The total is 6.21. C should be the answer. ABC costing is not concept based, it is pure mathematics. You want to solve one more question? Yes, this is a good question. The budgeted cost to manufacture, they are talking about the total manufacturing cost. For the ultrasound, using ABC costing is what they are looking for. So total manufacturing costing is direct material, direct labor, and overhead applied. Direct material used for ultrasound is $8,000. Direct labor is costing $12,000. And overhead applied. How do we find overhead applied? Overhead applied, we have to find out using this method. 14,000 is the overhead and divided by, what is it saying? It is saying something in your direct labor overhead applied based. Yeah, overhead applied is based on the number of direct labor hours. Yes, it's given directly in the question. Direct overhead applied is based on the direct labor hours. So that means 14,000. Out of this $14,000, direct labor applied. No, I mean overhead applied is based on the direct labor hours. Labor hours. So out of this 14,000, we have to find out for 1 hour. So that is 300 divided by 400. 300 hours for why 400? Because that's total out of 400 we are using 300 hours. So $14,000 is the overhead amount. We are allocating it, I mean, or prorating it based on the direct labor which is given in the question. So then the overhead applied for ultrasound will be what? How much is it? 10,500, right? 10,500. So the total manufacturing cost is coming to be 30,500. 30,500 is the total manufacturing cost that is coming. So then what is the total manufacturing cost per unit? That is here. Per unit is 100. 100 units have been sold. So we divide 30,500 divided by 100. What we get is $305. This is under actually traditional costing. I want it for ABC costing. Okay. So 305 is under actually this is the traditional costing. This is traditional costing. We have to do it for ABC, activity based costing. Activity based costing, we have to find out the activity. This is the overhead. So overhead is $6,000. All right. Engineering design. Engineering design, what is the cost driver? Is there anything mentioned here in the team?
6,000.
Manufacturers converted overhead. No, cost driver is not mentioned here. So, but here two things I've mentioned. One is the parts used, number of engineering changes, and number of product setup. So, number of engineering changes could be the cost driver for the engineering design. So, $6,000 is the amount incurred for ultrasound. Ultrasound out of three we have incurred one. So that is how much? $2,000. 400 units, it's how much? 400 units, it's $2,000. For 1 unit, it's how much? It's $20. You getting what I'm saying? Engineering design, we have an overhead. Engineering changes could be the cost driver. One engineering changes out of three. So that's 1 by 3. So for 2,000, so 100 units, $2,000. So for 1 unit, it's $20. Does it make sense? Cost per unit. Material handling. This is for this is the cost driver for setup cost. This is for material handling. Cost driver. I'm talking about the cost driver, obviously. So for material handling, it's $5,000. And we want it for ultrasound, which is 600 out of 1,000. So that is $3,000 for 100 units. So for 1 unit, it's $30. $5,000 is the material handling. This is the cost driver, number of parts used. Out of 1,000 units, which is the total of these two amounts, 600 have been used parts. So that is $3,000 for 100 units. So for 1 unit, it's how much? It's $30. Setup cost. This is the cost driver. Setup cost, that is coming to be $3,000. Out of 8, we have incurred 7. So how much is that? No, not 8. It's 7 plus 8 is 14, right? No, 7 plus 8 is 15. Yeah. This is 15. Out of 15, we are incurring 7. So
1,400.
how much is this? 1,400?
Yeah, 1,400.
1,400 divided by 1,400 is the total for 100 units. 1,400 for 100 units. So for 1 unit, it's how much? $4.14. If we add these three, what we get is the ABC costing, overhead rate, overhead amount. How much is that? 74. Of this 74, we have to add direct materials and direct labor. This amount. Per unit, huh? Per unit. Per unit.
Sir, only 64.
64. 74, right? Yeah, 64. Yeah. That is $30, $20, and $14. Yeah, 64. Yeah. That is 64. And direct material, direct labor is coming to be 20,000 is the total amount for 100 units. So for 1 unit, it's 200. The total of the amount under ABC costing, the total manufacturing cost is 264 under ABC. And under traditional, it's how much? 305? So what is the difference here? The difference you can see here is, since this amount, the overhead is lower, we have allocated total traditional cost based on the direct labor. We have allocated direct traditional cost. We have allocated overheads based on the labor hours used. Ultrasound has used more hours, so that is why it has incurred more amount, uh, more overheads is been allocated here. All right, compared to X-ray. But in ABC costing, what you can see is it has been prorated based on the activity and the cost driver, so that more accurate amount is being allocated, which reduces the overhead to 264. So if you are using traditional method and give a selling price based on that, you might be incurring profit, but it's actually loss. which is inflated. The profit might be inflated. All right. We will be solving more questions, so don't worry. Even if you are having doubt, even after solving all these questions, no issues at all. We will be solving more and more questions. Can you solve this one? It's pure mathematical, okay? It's pure mathematical. I'm not doing anything at all. I'm not even discussing the concept at all. Just tell me, the mathematics behind this. The question they're asking, which one of the statement is correct? Which one is more profitable? So this is revenue. Revenue, we have to minus this and we have to find out the delivery cost. We have to find out the delivery cost. How do you find out the delivery cost? Just find out for no muffins. That's enough. Any idea? Just tell me the delivery cost. Forget about the option. Okay. Maybe you can, if you want to stop, you can stop. Take this as a homework. If you want to take this as homework, you want to solve it here. Depends upon you. There are 150 deliveries, which we are delivering in 10 minutes. The cost is given for 1 hour. So we need to convert this into hours. So that's if you multiply this, that is 1,500 minutes. 1,500 minutes. So for 1 hour, it's how much? So for 1 hour has 60 minutes. This is for 1 hour. 1 hour, 60 minutes. So for 1,500, it's what is the time taken? So that's 1,500 divided by 60. We get 25 deliveries. 25 multiplied by $20, we get the answer. 500. Hello?
Yes, sir. It's 500. The cost for deliveries or for muffins is 500, while cheesecake is 425.
Yeah.
So 75 more for muffins.
Yes. This is mathematics, okay? I'm not explaining any concept here. I'm just trying to figure out the maths behind the question. So there are 150 deliveries. We are for 10 minutes. For 10 minutes, they are doing 150 deliveries. So for what is the total amount? That's 1,500 minutes. And we have to convert. They have given the cost for 1 hour. So 1 hour has 60 minutes. 1 hour has 60 minutes. So what is the time taken for 1000 minutes? That is 25 hours. 25 hours they are doing this delivery time. So for 1 hour it is $20. 25 hours it is how much? That is $500 for muffins. This is for muffins. See the logic behind how they've put the question, and then they've made us to think for 10 minutes. No, to solve this question, you'll get only 1.8 minutes in the exam. So yeah, I would suggest everyone to be good at maths also. So thank you guys. That's it for today. And I think the time is over. Yes. Me too.
Thank you, sir.
Thank you so much. I hope we will be solving these questions further in the coming classes, ABC costing. And we will take up a new topic that is process costing, life cycle costing, operation costing. And we will be doing, we are almost approaching the end of section D and theory. That's rest is theory. Okay. Theory, I won't spend many times. So I think by next week, section D will be over. Most probably. Okay. So yeah, thank you so much.
Noted, sir. Thank you, sir.
Thank you so much. Yeah, sure.